Start anyway. Done. Okay. Good morning to all of you. Anyways, we'll continue with our class related to technical analysis. So first of all, we will see today's market condition because, as everybody knows, yesterday there was some negative news on the Lakshmi Vilas Bank, right? So what has done for the market? The news is concerned. So NSE is concerned, as you can see, at 12,865.50. Today it is down by 8 rupee 70 paise. And some of the gainers for the day was Tata Motors, State Bank of India, IndusInd Bank, Mahindra and Mahindra, and Adani Ports. And some of the top losers are like BPCL, Britannia, Nestle India, Hindustan, Unilever, Titan. Students, last time I'm asking, am I audible to you? Can you see the screen? Can anyone reply yes, sir?
Yes,
Yes,
sir.
sir.
Yes, sir. Perfect, perfect. So this was about National Stock Exchange, which consists of top 50 companies. Now we will see Bombay Stock Exchange. So you can see here 43,974 point, 978.48, and it is up by 25.77. So the market is what you can say is almost flat today. You can see some of the index here, students. So whenever I'm saying something, please try to understand. Index is nothing but a benchmark. Okay. So some of the gainers for the day is Adani Gas. Last traded price LTP is 336.25. Oh, 43.35 up. That means 14% change. Then Vapco India, you can see here 6,041 per share. Today it is up by 641.55 rupee. Oh my God. Then India Infoline 124. VIP India, that is 349.15. And similarly, Credit ACC, that is 764.40. So this is the market. Now, anyone has read the news related to Lakshmi Vilas Bank yesterday? So what has happened with Lakshmi Vilas Bank? That's a negative news, right, in the market. So Lakshmi Vilas Bank, the latest news is concerned. So what has happened is uh, the Lakshmi Vilas Bank under moratorium to be merged with DBS. That is the latest one. The Reserve Bank of India, that is RBI, on Tuesday placed cash strapped, that is Lakshmi Vilas Bank, under a moratorium for a period of 1 month, and the restricted withdrawal is 25,000 for depositors. Please understand this. So even if you have kept 5 crore or 10 crore as a fixed deposit in Lakshmi Vilas Bank, so the withdrawal limit is at rupees 25,000 for the depositors. The RBI said, in the absence of credible revival plan with a view to protect depositors' interest and in the interest of financial and banking stability, there is no other alternative but to apply to the central government for imposing a moratorium under Section 45 of the Banking Regulation Act. So what exactly has happened with Lakshmi Vilas Bank? So if you see the Lakshmi Vilas Bank, it is almost one of the oldest bank in India. See, the financial position of the Lakshmi Vilas Bank has undergone a steady decline, with the bank incurring continuous losses over the last 3 years, eroding its net worth. In absence of any viable strategic plan, declining advances and mounting. See, what has happened exactly is the NPS has drastically increased and the losses are expected to continue, even the Reserve Bank of India has said. And to support the amalgamation, DBS will inject 2,500 crore into this bank if the scheme is approved. So this is a negative news, right? For the Lakshmi Vilas Bank is concerned. So let me see what is the bank price as of now today. Lakshmi Vilas Bank. See, these factors are external, which you cannot avoid. You can see here it is 12 rupee 45 paisa and it is down by 3 rupee. It is, I think it is a downward circuit here. That means I'm repeating here, upper and lower circuit. Two types of circuits are there. This is a lower circuit. Can anyone tell what is this lower circuit, or when it is formed? You can see the graph here. Lower circuit means what? So when we call the share is at lower circuit, you can see here lower circuit. That means, please understand this. I'll explain you upper circuit and lower circuit, or Anybody? Lower circuit and upper circuit? Okay. Carefully see your students. Am I audible to you? First of all, okay, let me ask. Ashwini Metgood, good morning. Am I audible to you? Sabia?
Yes, sir,
Vishal
audible.
Banerjee, am I audible?
Yes, sir.
Okay, okay. So, students, you can see here, I'm explaining the concept of lower circuit. That means in lower circuit, there will be no buyers. Please understand the situation. If there are no buyers for a particular company, for a particular script, right, only sellers are there. So it is called as lower circuit. And exactly converse of this is upper circuit. That means there will be no sellers, more buyers will be there. So then we call it as upper circuit. Right. So there are two situations. What I'm explaining you. For example, Lakshmi Vilas Bank is concerned today. Yesterday there was a negative news, right? From past 3 years, the bank is incurring losses, and RBI has imposed a limit of 25,000 withdrawal only, irrespective of you. If you have having crores together deposits, also you can withdraw only 25,000. So it's a negative news from the bank side, right? So there are no buyers for this particular company today in the equity market. So this is called as lower circuit. Okay. And similarly, if the demand for a particular company increases in the equity market, there are more number of buyers in the market. We call that as upper circuit. Clear, students? So we'll move on to our presentation. So what we were discussing in the previous class, we were understanding the charting tools, that is the technical analysis is concerned. We were going in depth and understanding the different types of charts and all. So basically, as we have understood in the previous class, technical analysis attempts to explain and forecast changes in security prices by studying only the market data. A study of the past share prices behavior to predict the future trend is termed as technical analysis. Right? So there are few assumptions of technical analysis which we have discussed. So some of them are like market always follows a pattern. So market price is determined by the forces of demand and supply. Then market discounts everything. Then post prices help in predicting the future price. Then we clearly know by this time the major difference between the fundamental as well as technical analysis. So the fundamental analysis, it is only suggestible for the investors who are looking for long-term investments in the equity market, whereas technical analysis is concerned. So normally people who are into speculation or intraday, so they will be entering into the technical analysis. So what they do is they predict the price movement based on the charting, and based on that they'll be taking a position for short term, and they'll be incurring either profits or losses, and they'll be exiting from that. So this is called as speculation. Okay. Then we understood the theories of technical analysis too, that is Dow theory as well as Elliott wave theory. Then we understood the majorly the different types of charts, that is line charts, bar charts, and a very popular charts that was called as Japanese candlestick and point and figure charts. Then after that, the very important thing was trends. We understood three types of trends. Can anyone tell me what are trends and what are the three types of trends? What we have understood? There are three types or two types of trend or one type of trend. Anybody? How many types of trends are there in the equity market when we are speaking in terms of technical analysis? Yes, Shruti?
Sir, three types of trends are there:
Okay, which are they?
upward, downward, and sideways trend.
Very good, Ma. Very good. That's more than enough for me. So upward trend means what? See, this trend is denoted by the systematic and extended rise in the price of the given equity or commodity or currency, right? Whereas downward trend is what? When more number of bears are there in the market, when more number of sellers are there in the market. So this trend shares all the characteristics of the upward trend, but in the reverse direction. Please understand this. So in the upward trend, can I know from you people, when there is an upward trend, whether you will take a long position or the short position? in the upward trend, whether you want to take a long position or the short position, whether you want to buy or sell in the upward trend. Yeah, Minaj Kazi, in the upward trend, whether you want to
Long way, sir.
long, correct, buy. And similarly, in the
Yes,
downward
sir.
trend,
Short position and
Short
selling.
position.
very good, short position, or you can sell the shares. Okay. And what do you mean by sideways? It is sometimes called as trendless also. That means similar to the other two types, the sideways trends allows no major difference in the price values between the beginning and the end of a specific time period. So trends, they're classified majorly based on the time frames as long-term, medium-term, and short-term trends. Then we understood about the support and resistance level charts. Uh, support and resistance means is a new variety of chart which detect the resistance, that is areas of supply as a stock price goes up, and support areas of demand as the stock price come down. Then today we will start. I think we even discussed about the mathematical indicators too. That is moving average analysis, MMA. See, moving averages are nothing but they are mathematical indicators of the underlying trend of the price movement. Moving average technicians or the rate of change technicians focus on moving average, denoted as MA, of the prices to forecast movements of individual securities or market indices. See, many people today, they'll be using 200-day moving average of the closing prices. Then there are two types of moving average analysis which you have discussed. That was called as SMA, that is simple moving average, as well as EMA, that is exponential moving average. Now, simple moving average is what? This is the most common method used to calculate the moving average of prices. So what simple moving average does? It simply takes the sum of all the past closing prices over the time period and divides the result by the number of prices used in the calculation. See, then in case of EMA is concerned, it is exponential moving average. This moving average calculation uses a smoothing factor to place a higher weight on recent data points and is regarded as much more efficient than the linear weighted average. The most important thing to remember about the exponential moving average, also called as EMA, is that it is more responsive to new information relative to the simple moving average. So this responsiveness is one of the key factors of why this is the moving average of choice among many technical traders. Then we have oscillators, one of the good tool here. In a broad sense, students, all time series oscillate. Trends, seasonals, and cycles can all be regarded as oscillating time series. Then we discussed that is oscillator refers to a family of technical indicators based on a measurement of price changes rather than price levels. I'm repeating once again. Oscillators refers to a family of technical indicators based on the measurement of price changes rather than price levels. Now, what I can suggest you students is, I request all of you to take up at least 1 or 2 certification in NISM, that is National Institute of Securities Market. I'll explain you that will help you, during your interviews as to understand the equity market functioning. See, all of you, please see the screen here. So what you have to do is, you have to go to NISM, especially it is National Institute of Securities Markets. So it will be completely online, students. You need not go to any center also. So first thing what you have to do is, any student who has taken up NISM examination, NISM, any certification. Okay. Shruti, how about you? You were planning to take, right? You did your internship also in the broking firm.
Yes, sir, but I didn't take, sir.
Okay. Probably next year you are planning to take.
Yeah, sir, now.
What? Now immediately I request all of you, especially the finance specialization students, kindly take at least one certification. See, you can see here, which is easy for you. 1 minute, wait, I'll show you. NISM. So this is the official website. First, you have to register here, certification, NISM certification. The moment you click here,
Sir?
yeah, first you have to register. Someone is speaking? Yeah.
Yes, sir.
Minaj.
It's Minaj here.
Yeah, tell me, ma.
Sir, like that, is there anything in LinkedIn, sir?
Plenty are there, ma. Plenty are there. LinkedIn is concerned. So today morning also I've messaged you. It is completely free of cost for 1 year. Okay, so you need not pay anything. So it is offered directly from Jain University. We have done a tie with LinkedIn. So it's called a University LinkedIn Learning Program. So what you can do is you have to just search investment management keywords. Okay,
Okay,
investment
sir. Okay.
management or portfolio management or the list of courses. Also, I have sent you the Excel in the group 2019 group. So just you can go through those courses and you can get it. No problem. That's a very good question, Minaj. So even in LinkedIn also, you can take up the certification courses related to investment management or any subject. Fine. But those who are willing to take NISM, this is recognized, across India. So first you have to register for NISM. So there are few fields, for the registration. So there is a step-by-step tutorial also, which has been mentioned in the certification. First step is online registration, then enrollment, then appear for the examination. See, Belgavi also is one of the center for the examination. So it is very easy for you. There are various modules available related to NISM. So you can take up. See, these are the available things. NISM series currency. You need not take this currency derivatives. You need not take. You can take equity foundation. Then we have mutual fund distributors module, right? Then equity derivatives is there, merchant banking is there, investment advisor is there. So foundation. See here, students, number 17. That is securities market foundation certification examination. So this will be easy for you since you know the basics of equity market. And what you have to do is the moment you register, the materials will be sent to you. So you can study that and you can take up the examination. It's an online examination, objective type. The duration of the examination is 2 hours. Or if you are planning to go for LinkedIn also, that is absolutely free of cost. You can take that also. Okay. Now, mathematical indicators, we were discussing about the oscillators. So we even discussed the types of oscillators also. That was called rate of change oscillators, then relative strength index, moving average convergent divergence, momentum oscillators, and stochastic oscillators. So why I am insisting you to take the certification is though you are knowledgeable in equity market, so this certification will help you to boost your confidence. And especially when you're applying for some of the good finance companies, they see all these certifications in your resume. If these certifications are there, it will have a lot of weightage when you go for the interview process. And more than that, if someone wants to enter into broking industry or investment management or as a research analyst, so these certifications are very, very, very important for you. Okay. Now you will not understand this, but when you join an organization, they want you to clear, they want you to get the certification. It will be mandatory. At that time, you will remember me. So whenever you are free now, so what I mentioned to you, NISM, at least one certificate, that is basic, that is securities market foundation. And the second one is LinkedIn. LinkedIn also, it is recognized globally. So they have got a tie-up with good universities globally. So you can take up. You people have done a fantastic job when it came to Coursera also. But additional to that, you can do even LinkedIn also. Okay. Now we will understand ROC. So that is rate of change oscillators. It is a very popular oscillator which measures the rate of change of the current price as compared to the price a certain number of days or weeks back. To calculate a 7-day rate of change, each day's price, I'm repeating students, each day's price is divided by the price which prevailed 7 days ago. And then it is subtracted, then 1 is subtracted from this price ratio. So how we calculate ROC? ROC is equal to current price divided by price n period ago. That means 7 days ago minus 1. Right? I'll repeat once again. To calculate a 7-day rate of change, each day's price is divided by the price which prevailed 7 days ago, and then 1 is subtracted from the price ratio. ROC values may be positive, negative, or even 0. The ROC values oscillate across the 0 line. Ideally, one should buy a share that is oversold. I am repeating once again, students. One should buy a shares that is oversold and sell a share that is overbought. Right? So these are very important to know when to buy a share and when to sell a share. If some share is overbought, then what happens automatically? Overbought means the price of the share will shoot up, right? So more number of buyers will be there. Overbought, then automatically the price, when it goes up, it reaches a consolidation phase, then it has to come down, right? So that is the best time to exit. Then similarly, oversold means what? It reaches a certain phase, a downward phase, more number of buyers are there, more number of sellers are there in the market for the particular script, and they have sold the share. Then you can enter it, right? So one should buy a share that is oversold and sell a share that is overbought. See, in the ROC chart, students, that is oscillator, that is a rate of change oscillator, the overbought zone is above the 0 line and the oversold zone is below the 0 line. The buying and selling signals indicated by the ROC should also be confirmed by the other price chart. Okay. Next we have RSI, that is relative strength index. So it is a technical indicator used in the technical analysis of financial markets. The RSI is classified as a momentum oscillator measuring the velocity and magnitude of directional price movements. Momentum is the rate of the rise or fall in the price. The RSI computes momentum as the ratio of higher closes to lower closes. So stocks which have had more or stronger positive changes have a higher RSI than stocks which had more or stronger negative changes. So this is, students, RSI is one of the most powerful indicator that signals buying and selling opportunities in the market. RSI for a share is calculated by using the formula RSI is equal to 100 minus 100 divided by 1 plus RS, where RS is equal to average gain per day divided by average loss per day. So the most commonly used time period for the calculation of RSI is 14 days. So for the calculation of 14-day RSI, the gain per day or the loss per day is arrived at by comparing the closing price. Please understand this. By comparing the closing price of a day with that of the previous day for a period of 14 days. Then the gains are added up and divided by 14 to get the average gain per day. Similarly, students, the losses are also added and divided by 14 to get the average loss per day. The average gain per day and the average loss per day are used in the above formula for calculating the RSI for a day. Then we have market indicators. So market indicators are quantitative in nature and seek to interpret stock or financial index data in an attempt to forecast market moves. So market indicators are a subset of technical indicators and are typically comprised of formulas and ratios. They even aid investors' investment or trading decisions. Now there are 5 types of market indicators. that is the breadth of the market, short selling theory, odd lot theory, and new highs and new lows, market sentimental indicators. We will discuss one after the other in today's session. First, we'll take breadth of the market. See, breadth of the market. This question will be asked, for less marks. Understand or define or explain breadth of the market. See, breadth of the market indicators are used to determine what the main body of the stocks are doing. It is computed by comparing the market advances or declines. So market breadth index is equal to 2 times multiplied by advances minus declines divided by unchanged. Then we have the second one, that is short selling theory. See, everybody know that when to sell and when to buy. So it is very, very easy to understand, right? So when more number of buyers are there, you can see this is one way. I'll show you the book here. Now you should only tell me what position we need to take. Say for example, Nestle India. I'll open the book of Nestle. Now you can see, I'll not tell you the price, but you can see the order book here. This is one type of understanding based on the number of buyers and number of sellers. You can see here 14,281 bulls are there, that is buyers are there for this particular script, and 16,753 sellers are there. So primarily, what do you understand, students? Can anyone tell me? So what is the last traded price? 16,749.90 for one share. So today it is down by 232.95. So what do you understand seeing the order book here? See your order book.
More number of sellers.
Come again? Correct.
So there are more number of sellers.
Sellers are more. Huh? How much? 16,753 sellers are there, right? So what happens by this? What is the understand? What do you understand by this? If sellers are more,
So it's a bearish market.
very good.
Beer market.
Beers have entered, right? So automatically one factor or one parameter. What you have understood by seeing this order book is, since sellers are more, so probably I'm using the word probably. I'm guessing that the beers are there, so the price might still fall. Correct? The price might still fall. So any company you take like that, for example, okay, I will take, wait, which company? DMart. So DMart is listed as Avenue Supermarket, right? So let me see. Now you only tell me what happens here. Avenue Supermarket. You can see here. Can anyone tell me? I have opened the order book.
Bearish market.
Bearish market.
Sellers are
Sellers are
That's sir.
More number of sellers.
Very good. So first thing, students, whenever you go to a broker or whenever you want to trade or investment, no problem, because you are for long term, but trading is concerned, these are some of the important things what you have to see. The first thing is you need to tell the broker, please show me the order book. Then you will come to know how many buyers are there and how many sellers are there. Now you can see here 64,647 buyers are there and 1,04,469. That means automatically by default it is in red today, right? See here 2,387.05. It is down by 45 rupee. Correct? I was not knowing, but just okay. Let me show you last script. We will not go for the price. We will directly go for the book. Then you only will tell me. See, students, can anyone tell me here? Seeing the order book.
bull market.
Hey,
Bearish market, sir.
The bearish
Bearish
market.
market, sir.
Bearish market, sir. Yes, sir.
Suppose if you are sitting to punch the order and if you take plus buy for me, then I'll be incur loss. Someone told bull market, right? See, it is clearly understood here. The sellers are more, right? And the buyers are 91,597. So obviously when I see the price, it should be negative today. Yes. 568.50. It is down by 8 rupees 60 paise. Correct? So morning 9:30, when you open, your favorite stocks are concerned wherein you want to trade, first you see the order book and you will get an idea how many number of buyers are there and how many number of sellers are there. You can ask me a question, sir, will it change? Yeah, definitely it will be changing, right? When more number of buyers are there, but this will give me an overall idea. But for today, I need to watch it carefully, then take my position. Then the last share I will see today, I'll see Wipro. Now you only should tell me, okay? Wipro is concerned. I will directly go for the order book. Yeah.
Bullish market.
Sir, bearish market.
Bearish
Again,
market.
Bearish
someone is
market,
telling
sir.
bullish, huh?
Bullish.
Again, someone is telling bullish. See the buying and selling order there.
Sir, bearish market.
Bearish market, sir.
Huh? Array, if I take you as my broker, then you will take exactly reverse position then. Correct, no? For Wipro, you can see here, the selling quantity, total quantity is 10 lakh and the buying total quantity is 7 lakh. That means bears are more, right? When bears are more, automatically the price will come down, and it has happened with Wipro here. 345.65, it is red, that is 3 rupee 5 paise. Okay? Okay, for your last share, I will take Tech Mahindra. This is called as order book. First thing, students, you have to first see the book. Okay. Now,
Sir, bearish market.
Bearish market.
Bearish market.
bearish market, no? Because sellers are 3,55,000 and buyers are 3 lakh. So you can see here, almost it is coming. The buyers are touching the sellers. So you can expect some recovery in this. So today it is down by 836.65. So you can expect some recovery, because when I saw the order book, hardly 55,000 difference is there between buyers and sellers in the order book. Clear, all of you? Perfect. So now you understood when to take long position, when to take short position. Huh? For example, if I open Lakshmi Vilas Bank, Lakshmi or Lakshmi Machineries also is fine. See, you can see here Lakshmi Machineries in BSC. You can see here the total buying and the total selling. Since the market price of this particular company is how much, the last traded price is, you can see here 4,230.05. That means to purchase one share of Lakshmi Machinery, you need to pay 4,230.05. Today it is up by 48 rupee. So when it is up by 48 rupee, what is your understanding? Vice versa, more number of buyers might be there. And you can see here 408 buyers are there for Lakshmi Machinery, and the sellers will be obviously less. So when more number of buyers are there for a particular script, automatically the price will go up. When more number of sellers are there for a particular script, automatically the price will come down. It is a tough fight between the buyers and the sellers. If the demand for a particular company increases, then more number of bulls will come, that is buyers will come. If the demand for a particular company decreases, then more number of sellers or bears will come. When more number of buyers are there, so what happens when more number of buyers are there, automatically the price will go up. You can see here, you can, let me show you this. Yeah, you can see some of the sellers here, wherein, okay, Dr. Reddy. Dr. Reddy is again a pharma company, right? So today it has taken a red position. It is in the top losers list, right? So per share it is 4,713.55. Today it is down by 70 rupees 60 paise. If you see the buying and selling quantity, obviously sellers are 1,07,000 and buyers are somewhere around 80,000. So the sellers are more compared to the buyers. So this is called as order book. We will prima facie in order book, we will come to know that more number of buyers are there or more number of sellers are there. Fine. So now we will come to short selling theory, the second one in case of market indicators. As a technical indicator, short selling is called short interest. So short interest has significance for the market as a whole, as well as for individual stocks. Short selling is a speculative operation resorted to by the market operators. When the share price decline, a bear thinks that the price of the shares will go down. Correct? In the future, he sells some shares which he does not own. I'm repeating once again, students, short selling. He will sell some shares which he doesn't own. In so doing, he creates an artificial supply, increasing the total availability of the shares in the market. It further helps decline in the share prices. He purchases them later at a lower price. The difference of the sales price and the buy price is the net profit. So this operation of selling the shares without owning is called short selling. Okay. Then we have odd lot theory, the third market indicator. The odd lot theory is a technical method for analyzing security prices, focuses on the buying and selling behavior of the odd lot public. Basically, small investors who buy in small quantities. I'm repeating once again, small investors are sometimes called as retail investors. Okay, retail investors. Shares are traded usually in round lots, that is groups of 100 shares. The small investor or retail investor more often than not buys fewer than 100 shares of a given stock. He need not purchase in multiples of 100 shares as it is used to be earlier when the shares were traded physically. Since in India follows rolling settlement where the shares are settled on a daily basis, the issue of short selling does not arise as the short sellers must cover their position by the end of the trading session on the same day. Then we have new highs and new lows. A supplementary measure to market breadth index is the high low difference or the index. The assumption underlying it is rising market will have more number of stocks attaining new highs and a dwindling number of new lows. The reverse also holds true for a declining market. Then market sentiment indicators. Students, one thing I want to tell is, a complete market is standing on the sentiment. We human beings, what we do is we go with the sentiment. If someone is buying, so we say, okay, we'll buy. If someone is selling, if that wave comes, even we will become bears. But it is not like the successful traders and investors. What philosophy they have is, when everyone is selling, they'll buy. And when everyone is buying, they sell. So they do exactly opposite compared to the crowd, compared to the people. They do not go with the sentiment. Right? So that is where Warren Buffett today has made so much money by only investing in the equity market. So, somewhere in the interview, he has told that he will watch the company's price movement for 5 years and then he'll acquire it and then he'll forget for the lifetime. That means you need to invest in such a company which will grow like a mammoth, whose price will grow like a mammoth, right? Then we have market sentiment indicators. Sentiment indicators attempt to gauge the overall mood of the market. When a sentiment indicators show an abundance of optimism, investors are advised to approach that market with a higher degree of caution. There are mainly two types of sentiment indicators. One is the put call ratio and the second is volatility index. So what do you mean by put call ratio when it comes to derivative market? The put call ratio is a common sentiment indicator. A put option gives the purchaser the right but not the obligation to sell. Put, please understand, put means to sell. Call means to buy. Understand this. Put, sell, call, buy. Okay? To sell a security for a certain price by a specific time. A call option gives the buyer the right but not the obligation to buy a security for a certain price by a specific time. An extremely high put call ratio indicates fear in the market since significantly more investors are betting on a downturn rather than an upturn. Then the second one is called as volatility index. The volatility index is another sentiment indicator. A high volatility index reading indicates high volatility and tends to occur when fear is prevalent in the market, whereas a low volatility index reading indicates complacency, which is typically associated with the stock market tops. So this is about the market indicators. So it was a completely theoretical unit what we have discussed, and a few topics also I have given for the presentation, students. So when the classes are reopened, that is from tomorrow, so I'll be taking the problems related to Unit 5 and Unit 6 and some of the theoretical concepts. And parallelly, what we have planned is, I'll tell to all of you, we will be taking online classes in the similar way, as well as offline also in the way. So the students who are willing to attend the offline classes, so for them, we will be taking, as usual, the classroom teaching. The students who are willing to attend online, absolutely no problem. For them also, online classes will be there. So from tomorrow onwards, the classes will start as usual. You have to get your COVID certificates, then you can attend the classes. If someone is really hesitating, having that fear in the family, better you can sit and attend the online classes. But my sincere request to you is, do not waste your time, students. Do the courses what I suggested you. You should have the maximum output the moment you come to the colleges. Okay, so have a great day to all of you. Thank you so much for your patience listening. I end my session today here. Once again, I thank everyone. Bye bye and take care.
Thank you, sir.
Thank you, sir.